All right. It looks like we're about at a spot now. So let's get started. Thank you everybody for joining. Happy Earth Week. It's not Earth Day. I Googled it earlier just to remind myself. It's on Saturday. Is this Earth Day? We're holding this webinar as a celebration of Earth Day. So hope you all find it informative and useful. My name is Zach Snyder, and I am a program manager with the nonprofit Solar Oregon. We're going to be taking a deep dive into the solar tax credit, which I'm very excited about. And I know that I've heard a lot of people are excited about this. We've got a really great speaker, Elizabeth Crouse, who I'm going to intro a little bit fuller in just a second. But Elizabeth is a tax expert. And I want you guys to know how difficult this is to find in solar and how much so many people really need a solar tax expert that just, for tax questions. And so it's really great. Really glad that Elizabeth can join us today. Give you a quick background on Solar Oregon, my nonprofit. We've been around for 43 years now. I have been here for the past 3.5. This is actually my last month. I'm moving on to another stage in my career, but we have 2 awesome new program managers. You're going to see a lot more of them in our future events. This is my last event with Solar Oregon. So glad that you all could be here with me at this stage in the journey for me. We are an educational nonprofit, and we talk all day about solar and battery storage and related technologies. And we work to increase adoption of those technologies and increase information that allows people to make right choices about solar and battery storage, talking mostly to home and business owners. We have a program called our How to Go Solar and Battery Storage. And that is a great place for you to learn about the ins and outs, including other incentives beyond the incentive that we're going to be talking about today. This is kind of the main incentive for solar. We also do tours and showcases for sites with solar. We put on a big zero energy homes tour in October, which is called Go Zero Tour, and I encourage you to check that out. We've been doing that for I've been doing that for a few years, and it's a startup of something we did back years ago as well. So it's got deep roots. And we also help to work with whole communities and solarize campaigns to help them all go solar at once. We have a few really awesome board members and also volunteers who are helping us to put on a series of events, which is parallel to some of the other events we've done. But this is the Green Energy Series, and our board member, Edward Louie, who is an energy efficiency researcher at Pacific Northwest National Lab, is going to be presenting on May 6th, which is a Saturday from 10 to 11 a.m. on vehicle to grid and vehicle to home, which a lot of folks who have electric vehicles are wondering, hey, I've got a battery in there. Is that something that my home could use? That is an emerging thing. So come to think about the future to that one, but that's a free event. And this series is recurring monthly on the first Saturday at 10 a.m. We're a member-based nonprofit, so huge thank you to everybody who is a member of Solar Oregon. That's an awesome way to support what we do. If you want to support solar in Oregon, you can see some of our info here. And we also just like to have a good time. And actually, our solar winery tour is coming up in July. And that is something that you can, I believe, find info for on our website as well. Also, this event and some of the other events that we put on are supported by Energy Trust of Oregon. Energy Trust of Oregon is an independent nonprofit. It's been around since 1991 that serves the customers of the large investor-owned utilities in the state, including Portland General Electric and Pacific Power, helping to increase our energy, our efficiency acumen and renewability acumen for how we use energy across all sectors of the state. And so that includes providing incentives as well as supporting a lot of initiatives, including the education that we put on at Solar Oregon. So thank you to Energy Trust for supporting this event as well. And a couple of notes. This is, it's a celebration of Earth Day. It's also a deep dive into the solar tax credit. And I'm going to be teeing that off in just a second. But I'm hoping that we can make this interactive. We like to have all of our events be interactive. And so we're on Zoom, and you have a menu bar. If you don't see it, you might have to mouse over your screen. You've got chat, and that is a great place to put chatty things. If you've got questions, that's a great place to put questions, and that's where we're going to be looking for questions. And so just know that that's a place you'll type in your question. Feel free, I already see a couple of questions in the Q&A box. Feel free to put those in starting now, and just whatever questions you have, the ones that we cover in the course of the event, we might be able to answer those just in terms of the content. Otherwise, we'll pick those up and turn this into a Q&A and conversation later on. So let me give a full introduction for our guest speaker, who I'm very excited about, Elizabeth Crouse. As partner at renowned law firm K&L Gates, Elizabeth Crouse provides business-focused solutions for U.S. federal, state, and international tax problems in a variety of transactions and investment structures, particularly in renewable energy and fuels, hydrogen, carbon, and cryptocurrency industries. Elizabeth is the practice group coordinator of K&L Gates' Global Power Practice, co-chair of their ESG practice, co-chair of their sustainability initiative, co-director of the Seattle chapter of Women of Renewable Industries and Sustainable Energy, chair of the Renewable Hydrogen Alliance's Oregon Policy Subcommittee, and a member of the Pacific Northwest Hydrogen Association Board Advisory Committee. Elizabeth has been recognized by Best Lawyers for Energy and Tax Law and Super Lawyers magazine as a rising star. I hope that gives you just a little bit of a window into why I'm so excited that Elizabeth has joined us today. And I just want to frame why Solar Oregon is wanting to do a deep dive on the solar tax credit for Earth Day. This is an incentive. We're calling it solar tax credit. You might hear investment tax credit, ITC, for residential folks, the residential clean energy credit. This is an incentive that's been around since about 2008, 2009, has really helped the whole industry grow. This is a federal incentive. This is likely the largest incentive that you'll have access to if you go solar. It has helped countless home and business owners to go solar. And so this is something that is responsible for a whole lot of clean energy getting out there. It's also the only incentive that you will apply for on your own in Oregon for the most part, especially if you're a residential homeowner. So it's a little bit different in that way. And it's that we get to chat about tax law. And I know I just did my taxes on Saturday. And so I hope none of you are sick of taxes right now, but that's what we're going to be doing. So I'm going to, Elizabeth, I'm going to let you take over. I'm going to stop sharing my screen, and then feel free to load up and just kick it off.
Awesome. Well, thanks, Zach. And I hope everyone will join me in congratulating you on your new adventures. Thanks everyone for being here today. We're going to focus on the residential credits. They're a little different than what we think of as the ITC, which is really a business credit. It has a lot of different quirks, frankly. But if anyone has questions about sort of the business credits, I'm more than happy to pick those up. And as Zach mentioned, we're going to focus on the federal credits here, right? Obviously, Oregon does have income taxes, as all of us who did our taxes last weekend, including myself, know. But on the other hand, the federal income tax is really where the big whammy is. And that's where these tax credits are really most valuable. I'm going to go ahead and share my screen now. Okay, and I'm not going to do the fancy make the PowerPoint look nice thing because it never works properly for me. So
That's totally fine. Yeah.
we'll do old school. So contents, for those of you who saw the invitation and actually read it, we're really here to talk about some of the basics. What are the tax credits for? How do I use them? How much are they? How do I claim them, essentially? And that's what we're going to go over today. So let's start out with the basics. What's a tax credit? And this is something that a lot of people get hung up on, which is why I wanted to just touch on it really quickly. If you owe $1 of US federal income tax to the IRS and you don't want to pay it, probably the cleanest and safest way to do it is to get a tax credit of some sort. Don't just not pay your taxes. So if you've got $1 that you owe and you've got $1 of tax credits, those offset completely. So you wouldn't owe any federal income tax at that point. So credits are just a one-to-one offset. They are different from deductions. Like you might have a deduction for, an investment expense or something like that. You might have a child tax credit, child care tax credit, sort of a similar concept, right? In that it's a credit. Now, one thing to bear in mind is the solar tax credits are not refundable. What that means is that you have to have tax to offset in order to use the credit. If you don't, then you can't really use the credit that year. So let's talk a little bit about what the credits are for. Now, those of you who live in a neighborhood like mine, this is actually a picture of one of my neighbors' houses. You'll see that a lot of folks in the Portland area right now have installed solar panels fairly recently. This particular house just installed it about a year ago, if I remember correctly. There have been a lot of proliferation of rooftop systems, okay? And that's what I think a lot of people, particularly in Portland, think about, maybe in Eugene and Salem too, even Medford for that matter. But the point here really is that we're not just talking about rooftop systems. For folks who have some land and maybe some shade on their roof, you're not screwed. You could put the panels out in a field. You could put them in the backyard, wherever they're actually going to get sun. And you can still take advantage of these particular credits. So don't feel like you have to have a roof in the sun. You just need to have a place where the sun shines, where you don't mind putting panels, frankly. Now, other things do also qualify. But one thing that I want to talk about first, the reason why it doesn't have to be rooftop, but it does need to be near your house, is because the electricity has to be used in a dwelling unit that is your primary residence. So this isn't good for vacation homes. It's not good for the shop where you run your commercial fishing operation. It's not good for the shop where you run your, crafting business of some sort, or your accounting business in your back shed, whatever. There are other things you can do to get tax credits for solar panels for the business, okay? That's the ITC, the investment tax credit. The panels have to be used in a trade or business. In principle, you could use them to supply power to your existing business. It's just, you have to think through the factors there, okay? And the rules in that context are fairly different than they are in the residential context. So it's a separate conversation. But same thing, rooftop is fine, ground mount is fine. Solar water heaters are also incentivized into the same provision of the tax code. They have to be certified for performance by the Solar Rating Certification Corporation, which is a national nonprofit. Oregon has adopted that standard as far as I can tell anyway. Solar water heaters are kind of interesting. They do look different than panels, but ultimately what they're doing is using solar radiation to warm up the water that's going to go into your water tank in your house and supply the water for your shower. Ultimately, that's what it's about. They do actually work in Oregon. You see them occasionally. There was sort of a big spurt of interest in solar water heaters around 10 or 12 years ago. And then interest has kind of tapered off a bit, but we expect to see a bit more interest in them now. Batteries are also newly incentivized post-Inflation Reduction Act. So the Inflation Reduction Act was the law that was enacted last August that basically sort of renewed and revitalized the tax credits for clean energy. Part of that was saying specifically for residential use, batteries now qualify all by themselves. So if you've already got panels on your roof or in your back 40, and you want to install some batteries now in order to store the power, you can get a separate credit for those batteries. It has to be at least 3 kilowatt hours capacity. 3 kilowatt hours is actually a fairly small battery. So most of the systems that you would likely end up buying anyway should qualify. Now, the battery doesn't necessarily have to be used in a dwelling unit used by residents or used as a residence, but I think you should probably read that requirement in because it's not super clear in the statute. So how do I take advantage of the credits? These credits not only require some of these use and minimum standard requirements, you have to own the system, okay? So those of you who have had some solar developer knock on your door and try to sell you solar panels will know that there are different ways of getting panels on your roof. There are leasing situations, okay? A situation where a homeowner is leasing panels, the homeowner is not going to get the credits. They will go to the company that's owning the panels. That's when you see a typical sort of investment tax credit situation, okay? If on the other hand, the homeowner buys the panels and that you own the panels, maybe somebody's maintaining them for you, that's the kind of situation where you can get the credits. Now, there may also be financing associated with that, right? The company that's selling you the panels might also want you to work through them to borrow money to pay for the panels. Or you might just go to your regular bank and borrow some money. That's all fine. That's over and above the tax credits. There are some details in there for the lawyers to worry about. But on residential systems, you're not necessarily going to have a whole lot of negotiating power. You're basically going to need to do what you need to do in order to put panels on your roof. Condo owners can use these credits, okay? Basically, the condo association has to own the panels. And then the members of the condo association, AKA the owners of the condos, would claim the credits in sort of a proportionate basis. So it is possible. I've seen it done before or heard about it being done. I don't know that it's particularly prevalent or common yet, but it is something that is possible. You do obviously have to use the equipment correctly, right? Like with the panels, the electricity needs to go to your primary residence, right? Now, those of you who have talked with the utility about net metering credits or something like that, or have heard of that term, you know that typically the panels that are on your house are technically, usually putting electricity on the grid, right? They're going to the local utility and you're getting a bill credit or a net metering credit for the amount of electricity that you're generating on your roof or in your back 40. That's okay, right? That's not going to screw up these credits. That's just sort of a billing sort of phenomenon, if you will, a billing method. Water heaters and batteries, you need to make sure that you buy the right system, right? We talked about some of the requirements a few minutes ago. So just make sure that you're buying the right thing as a precaution to make sure that you actually can claim the credits. And as I said earlier, you have to actually owe US federal income tax for the year. This credit, if you got other credits, or maybe you didn't have a whole lot of income in a particular year or whatever, if you don't owe tax for the year, you can't claim credit. It's zero. So it's important to think this through as far as, when do you want to put panels on, and making sure that the year in which you put the panels on your house or in your back 40 and turn them on, AKA place them in service, that's the technical term, make sure that in that year you have a tax liability that's enough to absorb the credit that you're going to get. Which brings us to, how are the credits calculated? So when we think about tax credits like this, we're thinking first about cost, okay? So it's the cost of the panels, the associated equipment, the wiring, the inverter, the bits of steel that they throw on your roof to hold the panels, which we call racking. Same thing if you were to do a ground mount. All of those costs add up to, a reasonable amount of money. And then you need to think about the installment costs too. All of those costs, generally speaking, would be amalgamated into one final cost number. In a residential system, that's usually going to be the base for calculating the credit. In a commercial system, there's sometimes a difference between what you can claim the credit on and the total cost. not really that important or that relevant for residential because it's not usually what happens. You need to think about what are the ancillary items. So the structural items, things like racking should qualify. There are situations in which you might have to do some work on your roof in order to support the panels. At that point, if you're thinking beyond what the panels are themselves, you need to start thinking about, well, is that line item, is that cost can be qualified? And in some cases it will, in other cases it may not be. So it's important to get really specific detail about what the costs are attributable to so that you can calculate your credit correctly. Some folks have this idea that if they generate solar electricity to power a hot tub and warm up the water, that's going to be thermal storage of the electricity or the energy. That does not count here. So don't get any fun ideas. Unfortunately, this is not a credit to just keep your swimming pool warm. The rate is tied to when the equipment is turned on. So I mentioned a minute ago the term placement in service. That's a really technical term in tax. Basically what it means is the equipment is ready to operate in the manner in which it's intended. Generally speaking, you're going to turn it on at that moment in time. You don't necessarily have to, but once it is ready to, that's when it's turned on for purposes of this credit. And you're going to claim the credit for the tax year. For most of us, it's calendar year. You're going to claim the tax credit in the year in which that equipment is turned on. Now, right now, because of the IRA, the rate is 30%. So that's a pretty significant chunk of change when you're thinking about a solar facility for your residential property. The cost varies fairly significantly based on what your load is in your house, how many lights you got on, how many computers you got running. My husband likes computer equipment, so it would probably cost me a fortune. But on the other hand, the 30% does really offset a lot of that cost. The credit will be claimed on your tax return. We'll talk about that in a minute. And like I said, it's an offset of the tax that you would otherwise pay. You're not going to get a check from Treasury. It's just basically Treasury saying, oh, great, you did a good thing, so you don't have to write us as big of a check. Now, if that means that you get a refund because you've already paid too much in taxes for the year, like through your paycheck, in that situation, you may get a check. But remember, it's not refundable if you didn't owe enough tax. So, for example, if I owe $100 worth of income tax for 2023, and I've had all of that withheld through my paychecks, my employer's been paying it on to the IRS over the year, but I spend enough money on a solar facility that I get $30 of a tax credit, right? That means I'm going to go file my return. I'm going to say my employer withheld $100, but I've got a credit. So that means that I only owe you $70 of tax. So refund my $30 that's attributable to tax credit. That's okay. That's an acceptable refund in this context. An example of when you would not get a check from Treasury is, let's say you're a sole proprietor or you're retired or something like that. You don't have a whole lot of income coming in. Maybe you don't actually owe any tax this year because you just didn't earn enough. At that point, if you go spend money on the solar system and you tell Treasury, I don't actually owe you any tax. I never did this year. But here I bought a solar system and it earned me $30 of tax credit. At that point, Treasury is going to say, sorry, no dice. We're not writing you a check. This is a non-refundable credit. That's what they mean. So the point here really is that we've got 10 years for the credits to be earned at this maximum 30% rate. After that, it's going to drop off pretty precipitously so that after 2034, there won't be any tax credits. One thing to note, those of you who have dealt with solar before or who might have some understanding of the industry know that our tax credits have a habit of going away, and then Congress has a habit of renewing them like at the last minute. A lot of folks have worried about the IRA, and those of you who read the news on a regular basis know that there's a faction in Congress right now that's basically trying to dampen down the energy credits that were enacted last year. It's fairly unlikely that they will succeed, but it's also fairly likely that this sunset period, this ramping down, will actually come to fruition. And it's pretty likely that it won't actually be renewed after 2034. The reason is that the IRA, the Inflation Reduction Act, was so aggressive on tax credits. It has such an aggressive environmental goal behind it that if things work out properly and Congress doesn't dampen down the credits and Treasury issues the right guidance, we should actually have a good chance at accomplishing a pretty significant energy transition over the next 10 years. And there are a lot of ifs there, but that's why I say I wouldn't expect these credits to be renewed, but you've got 10 years, so get on it. Now, how do I file correctly? So there is a form. Zach included it in the JPEG for the invite. It's form 5695. It requires fairly basic information, frankly. You know, what kind of equipment did you buy? What did it cost you? If it's solar, confirmation that the equipment's being used for the primary residence. Confirmation that you actually owe tax for the year, right? It's pretty high level stuff. And it's not really that difficult to fill out. It's fairly intuitive. Now, it does get filed with your US federal income tax return, okay? So for those of you who filed on time yesterday, you would have included this form with your tax return, although this particular version of the credit was a little different last year. If you install some solar or batteries or what have you this year, you will file this form. It will be changed a bit before the 2023 filing season to account for the change in law. So if you go look it up today, and then you look it up again next March, it's entirely possible it will look a little different. But I have no reason to think that it's going to be substantially more difficult to fill out next year than it is this year. So that's a really big sort of highlight, real high level view on the residential credits. They aren't really that complicated, to be perfectly honest. Although, you know, if you are interested in solar or batteries, you might want to sit with them for a minute. Sit with the IRS website. The IRS website actually has a fair amount of detail, fair amount of information on some of these programs. Of course, Solar Oregon is also a good resource for those of you who are thinking about solar in more general terms. And with that, I will turn over to the Q&A. It looks like some of you have put some things in the box. Please feel free to include a few more points here. I think the first thing is from Ola Urson. City Repair is holding its 2023 Earth Day celebration at Kailash Eco Village, which is in Portland, this Saturday from 10 to 4. There's a 59 kilowatt solar array that brings them about 2/3 of the way to net zero, and they'll be giving free tours on the hour. I might actually take my kids to that. That sounds kind of fun. And the Kailash Eco Village is 4311 Southeast 37th Ave in Portland.
I will post that in the chat actually as a community announcement.
Yeah, great idea. Another question from a gentleman in Pendleton. I need to replace my wood shake roof with an alternative material before installing solar. Some of the solar companies say I can include the roof costs in the total with panels for the credit. Others say you can't, which is correct. So there's a provision in the residential solar credit that kind of makes it sound like you can include it. Coming from the non-residential sector though, I get a little worried, frankly, about whether or not you can do that. The reason is in the commercial setting, you can't. It's a sunk cost and you're lost. The residential provision, on the other hand, does talk in not particularly clear terms about being able to include costs that are arguably structural in your cost for your solar panels. Replacing the shakes is not obviously structural. It's more of a roof expense that may have to be done regardless. So if it were my tax return, I probably wouldn't claim that cost. On the other hand, I am certain that there are people out there who would claim it. Let me put it that way.
Can I put just a I guess Solar Oregon's little note on there, which is that there are a lot of folks who will say a lot of things about the tax credits. And something that we say consistently is Solar Oregon's not a tax professional. And so I definitely trust Elizabeth here, and there's not many people who I would trust a claim at face value, and that applies to things like roof costs, but also other claims you might hear around in the industry. I think folks generally try not to make claims like that, or if they do, they try to emphasize they're not a tax expert. But that's the whole reason why we're having this event. So, and Elizabeth, what is the so there's some it's unclear in the language, right? But how does that work if you do something, right, and then you get audited, and then there's that question? What does that look like?
Yeah, it looks like an ugly audit. So generally speaking, if you claim more than the tax credit that's available, according to the IRS, what'll happen on audit is they simply will not allow that portion of the credit. But what'll happen is they'll usually disallow a pretty large chunk and then require you to defend why you should get more. So for this particular point, what the statute says is no expenditure relating to a solar panel or other property installed as a roof shall fail to be treated as property that's qualified solely because it constitutes a structural component of the structure on which it is installed. Structural components often are things like the supports for a carport solar panel, right? We see those sometimes in the Southwest, for example, where you may have an array of solar panels that provides shade to the parking spots. At that point, we're thinking about that steel support that holds up the panels, and that really isn't there for shade, it's there to hold the panels, and shade is a byproduct. Here, when we're thinking about roof shakes or possibly better yet, maybe you're thinking about some kind of support that's going to be integrated into the building that wouldn't really be there, but for the solar, you need to have a good defense in an audit about why that's qualified. Because if it's just, oh, this is part of my roof and I had to replace it before I could put in panels, that's probably not going to be a good enough excuse. And it's going to be very difficult to get the IRS to move off of their position unless you have a really good explanation, a good solid explanation that ties tightly to the statute. It's not something for those. I wouldn't urge anyone to embark on that kind of process without really sitting with the rules for a little while and getting yourself comfortable in your own head, regardless of what somebody tells you, to Zach's point.
So sales guy who seems really great says, oh yeah, this qualifies. The bottom line is that person doesn't they're not liable, right?
Nope, they're not liable.
Yeah.
Yeah. So just, exercise healthy caution.
Great.
And if you're really concerned about it, if it sounds too good to be true, it probably is, unfortunately. Okay, so there's just a next comment. This is complicated. Yeah, it is a little complicated. It's true. It should be fairly straightforward. If all you're doing is installing some panels, that's it. And you know exactly how much those cost. And then you can file the form. It should be surprisingly simple at that point. It does get a little more complicated when you do other things though. Okay, so next question, does credit roll to a following year if you don't have enough tax liability the year of the install? So I think, hold on just 1 second. I think it does. I believe it does, but on the other hand, I'm not 100% sure of that. If you don't have enough tax liability for the year, I believe you can carry it forward. I don't remember exactly how long. So you can on the commercial credit for sure. It's a 20-year carry forward. There's also a 3-year carry back though. But those rules are different. All right, so then next question is, if you get a $10,000 tax credit, and use 4,000 years of it in year one. It's the same question with the carry forward. Let's see. Same question again. So it looks like somebody is posting in the email or in the chat that there's an IRS doc that clearly states no to roof issues based on 2018. Yeah, that's what I'm trying to get at. If it's structural, then you may have an argument, but just roof shakes, I wouldn't take that position. Next one, let's see. So it's a point on filing. The cost basis to figure the 30% is after any buy down incentives that are received by the contractor and are credited to the customer. These are utility incentives in the Oregon rebate. Contract cost minus these is the cost basis for the 30%. I have not, to be perfectly honest, have not looked into those programs. If you do get a benefit of those and it's a reduction in the purchase price, though, that would be true. Oregon rebates, my understanding is that prior iterations have reduced the purchase price. So I would generally agree with that. But like I said, I haven't actually looked at those programs.
That is something that is the industry deduct that from the claimable cost. Excuse me.
So then the next one is about condo ownership. So the question is, can you review the condo item in a little more depth? If all the condo owners in one building agree to adding solar, then the tax credit flows equally to them all. So the point here really is that you have to be a member of the condominium management association, okay? You have to own the condo. And then you would get a proportionate share of the expenditures of the association on the solar. So the association is going to take a vote, presumably, and will then go out and invest the money. And then it's a proportionate share. You don't necessarily, I mean, as a tax matter, it doesn't require that everyone agree on adding solar. It's just a matter of what the condo association does. Maybe splitting hairs there, but just want to be clear. So the next question is, can this include DIY project expenses? I'm assuming this is really somebody who's thinking about installing solar panels themselves in their house. Yeah, I mean, you don't have to have a professional installer. All the IRS really cares about is that you spent the money on the solar panels. Next one is, what if TurboTax doesn't recognize this credit? It treats it as part of the itemized deductions and compares against the standard deduction. I have not ever used TurboTax. I have no idea what to do with that. I would probably call them. Actually, they must have a hotline of some sort. When I said it, I mean, and you can always file your tax return the old-fashioned way by downloading it and filling it out, if you really want to. All right, so what incentives are out there for home builders who want to add solar to the new homes they're building rather than leaving it for the new owners to do? That's a really good question. So there are different things you could do, a lot of different things, actually, most of which are not really going to be useful for probably a lot of the audience members here, and I'm happy to talk about it offline. But generally speaking, because the tax credits, both the residential and the commercial tax credits, ultimately tied to ownership, you may be able to retain ownership of the panels and then lease them to the homeowners or something along those lines. You may also be able to simply charge them more for the panels, include that as a line item in the amount of money the house costs of some sort. So there are different options. You just really need to think about what makes sense for your business. This is a really hot topic right now in California because of some of the legal changes that they've had requiring solar panels and no natural gas and yada, yada. So there's sort of a question about how do we shift the benefits of the tax credits? The one nice thing about trying to think through, well, could the builder retain ownership of the panels, is that the panels cost something. And for panels that are used in a trade or business of some sort, there are depreciation deductions, which further reduces the tax bill. Homeowners can't depreciate the panels on their homes, right? There is no depreciation deduction just for, owning a house or what have you. And so trying to think through how you can keep the panels in a business can actually be fairly lucrative if you do it right. But again, happy to talk about it offline. Next question is, can the credit be split over multiple years? I think that's really the carry forward question again. Let's see. Next question, let's see. Somebody phrasing the cedar shake question a little bit differently. Solar could not be installed without added structure and doesn't serve another common home function purpose. Shingles, on the other hand, does serve a common home function purpose and shouldn't be able to be used in the cost basis. I mean, that's kind of the point, right? In most contexts, we think about, is this equipment integral to the generation of electricity? And what we're asking when we ask that question really is, does this need to be used in order to generate electricity, or does it serve some other function too? Okay, let's see. So does the state of Oregon have any incentives beyond the federal credit and the assistance from the power companies? I actually don't know. Zach?
I'm happy to go over that quickly. So it depends. Yeah, it depends on your utility company. You might be eligible for incentives from Energy Trust of Oregon. They have a standard solar incentive that's for PGE and Pacific Power customers. Looks like you're in Pendleton, so hopefully you're a PAC Power customer there. And there's solar within reach, which is quite a bit larger on the $6,000 to $7,000 magnitude. It's income qualified. And then there's the state rebate, which is also income qualified because that's the only pot of money that's available left still. But that's up to $5,000 for solar and additional $2,500 for a battery system if it's installed at the same time and tied to that solar system.
Exactly. And a comment that's sort of on point here in the Q&A, for the Oregon rebate and most utility incentives, they require an approved contractor. You may be able to work with a contractor and still install it yourself, but oversight and sign off costs and thing. Observation is that many contractors don't want to get involved in owner installs for multiple reasons, including liability. So 100%. And then there may be a workaround or appeal process. That may be true at the Oregon level, but like I said, at the federal level, IRS doesn't care who installs it, frankly. So okay.
I think if you guys have other questions that slip in, that's great. I just have a couple questions for you, Elizabeth.
Sure.
I heard you. It really caught my interest when you were talking about it matters what water heaters, solar water heaters, and batteries, and so there, like you mentioned, solar water heaters were the bee's knees about 10 years ago, and maybe they will be again in the future. Batteries certainly are currently now, and I have not heard anything about it depending on what battery type. And so I would love if you have information on that.
It's not a battery type, it's just a capacity issue. So what the statute says is that you've got to spend the money on battery storage technology, battery in other words. It's got to be installed in connection with the dwelling unit in the United States that's used as a residence by the taxpayer. Okay. So again, probably not your vacation home, and has a capacity of not less than 3 kilowatt hours. So 3 kWh is not a huge battery. So just need to make sure that it's sized appropriately.
Yeah, there really aren't that many. I'm not sure I can think of a unit that's less than 3 kilowatt hours. And those are the mini units. The standard one is, between 9 and maybe 13 kilowatt hours. But that's really interesting about the attachment to the dwelling. Those types of rules, I imagine some folks will be, making assumptions, be tripped up on that kind of thing. And so that's good to know.
In connection with the dwelling unit, it doesn't actually have to be in your garage, right? It could be in the shed or whatever. But it does need to be in connection with the dwelling unit. So again, these are really intended to be residential credits.
Yeah.
you know, if you've got a business at your home site, or you've got a business just generally speaking somewhere else, you're not going to be looking at code section 25D, which is the residential credit. You're going to be looking at section 48, which is the investment tax credit. That's intended for property that is subject to depreciation, AKA it's used in a trade or business. So normally, right, we're thinking about, you know, the giant solar installations, like there's one on the way to the beach. If you go through McMinnville, right, that's a section 48 kind of property. But it's also available for things like rooftop systems at your business, or a small solar array that's used to power, you know, an oyster farm or something like that. Any of those kinds of situations where you've got a business that's being operated, you're thinking about section 48, not section 25D.
Gotcha. Great.
Mhm.
And then I'm just curious, what is the tallest tale you've ever heard of somebody like someone comes in with a misconception they were told by somebody, it's like, oh, this qualifies or that, you know, is there, or just is there like a weird story or like funny story?
Not
Not
That's
to put you on the
hilarious.
spot, but
Okay. Well, no, I mean, I think there have been a lot of attempts to try to jam things into the qualified basis. There's also been a lot of attempts, like in the commercial context, there are a lot of different things that you can do, like, and try to push the boundaries. In the residential context, there's not so many things you can do, right? And so like the question about cedar shakes needing to be replaced, that's a not uncommon sort of question, right? And like I said, I wouldn't claim it, but I'm sure there are people out there who would. There are other things like if I want to put panels up and I want to use it to, I don't know, power my hobby farm or something. I've had people ask about things like that, and that starts to get into weird niches in the law that are expensive to figure out. But yeah, no, I don't know that I have any funny stories. Maybe sad
okay.
stories, but I'm not going to share those with y'all.
Okay, yeah, let's keep the sad stories for another day. We're celebrating today, so
Yeah, yeah, exactly.
I saw one more thing coming here on the Q&A. Maybe we can hit that and then we can wrap up.
Sure. I think it's more of a comment, right? About heat pump water heaters being hot in Oregon rather than solar water heaters. Yeah, heat pump water heaters are definitely interesting. There's a different section of the code that involves a federal income tax credit for those. They are really interesting, and they're definitely popping up in the market these days. Solar hot water heaters, I don't know if they make a whole lot of sense in Oregon, but we are starting to see interest pick up in some parts of the country. So
cool. All right. Well, Elizabeth, thank you so much. Like I've been saying, I've just been super excited for this. This is recorded, and so I'm very glad because I'm going to want to listen to you go over some of this stuff again on my own time, and that's going to be something we'll send out to everybody. Thank you, everybody, for joining. Happy Earth Week. Happy. Hopefully, you're done with taxes. If not, I'm sorry. But yeah, thanks for joining us, and really great to be with you all today.
great. Thanks very much, Zach. Thanks, everybody. Bye-bye.
All right, take care.